Welcome back. I'm Jesse Baines with Yahoo Finance Canada. You're watching Editor's Edition. Today we're talking real estate during COVID-19. And the name of the game seems to be inventory. We are seeing sales falling. How is that all shaping up when it comes to price action? To help us make sense of that, we have John Pasalis of Realosophy Realty. Hey John, thanks for being here.
Thanks for having me.
And in Vancouver, we have Steve Saretsky of Oakland Realty. Thanks for being here, Steve.
Yeah, looking forward to it as always.
Okay, so I'll start with you, John. We're seeing these headlines of sales falling, but prices not so much. But then again, we see inventory levels at extremely low levels. So is this a case of, people would be happy to buy if they could, that there's just not anything to buy when it comes to the GTA, John?
Well, yeah, I think there's a couple of things going on. Certainly, inventory has been the lowest it's been for a very long time for the month of July. And that's primarily because basically a lot of sellers are not listing their homes right now. Demand, even though it's been falling, is still historically quite high. So there's just not a lot to choose from. So I do think a lot of this is seasonality, especially in Ontario, with these lockdowns opening up. So we should start to see probably quite a few more listings as we move into the fall market.
And how does the low-rise market differ compared to the condo market, especially when it comes to downtown versus the outskirts, I guess you could say, John?
It's interesting. They've both been quite competitive lately. The story, of course, for a lot of the past year has been that it's mainly the low-rise market that's driving the market, but a lot of demand did pick up in the condo market, and condo sales are unbelievably high. It's a competitive market. It's not quite as competitive houses, but both markets are really still quite strong right now.
Okay, Steve, what's it looking like out west? Looking at that whole inventory picture.
Yeah, the inventory is quite interesting. I've got the housing bears piling on my Twitter feed there. About looking at the sales down, X percentage, whatever the headline reads. But it's like, yeah, you have to look at it. March of this year, we had, record all-time sales of any month of any year. So it's like, of course, you're going to see sales eventually come off those kind of levels. But what the problem is that you still have sales running above their long-term averages. So you actually still have a really strong sales happening in the market. If you look at the number of new listings, they've really just plunged off of a cliff. So, if I look at the detached, market here in Greater Vancouver, in July, it was a 20+ year low in the number of new listings that came onto market. And even, as the market as a whole, if you throw in townhouses, condos in there, it's an 11-year low for new listings coming to market. So the problem is that, yeah, sure, sales have dropped off, but so have listings, and so inventory is not actually building. And so as we look into the fall market ahead, it's like, okay, well, what's the fall going to look like? It's still going to be a market that's plagued by low inventory, and so it's really hard to see, structurally how you can get meaningfully lower home prices when you have 2 months of inventory on the market.
Right. So is this inventory or lack of inventory a matter of, we're just not building enough homes or the right types of homes? Is it reluctance, people not really wanting to necessarily move, or especially not during pandemic times, they just want to hunker down and do what they're doing, Steve?
Yeah, well, I think if we look throughout the pandemic, we've had relatively strong listings. Like I think back in February, March, we had record listings. So, I think of right now, I think it's definitely a seasonal thing where I just think everybody's so relieved to get out of the house and to go and enjoy their summer plans. So it's more so than usual, right? This is not your normal summer. Everybody's been cooped up for the last year. So what we're seeing now is just a lot of people putting their plans on hold, and a lot of realtors too telling their clients, listen, I'm going away, I'm going to my cottage for the next 2 weeks. Don't call me, I'll call you in the fall and we'll get your house in the market. So I think there's an element to that. So again, I do think we're going to see a significant uptick in listings come the fall, but it's just a matter of where do the sales come in the fall as well. Does demand pick up as it normally does in the fall?
Okay, and now we are seeing life sort of at least partly return to normal. Some people may be going back into the office restaurants opening, nightlife a little bit. Steve, are you finding that urban exodus is sort of reversing, where people are now coming back into downtown?
Yeah, I think we talked about this a little bit in the last show, but just seeing we're seeing renewed activity in the rental market downtown, which is usually a pretty good indicator that demand is picking up. And then we're seeing it as well in the downtown condo market, particularly where the investors normally play. So that's kind of, the investors, first time home buyers, they typically tend to compete on condos downtown under 650,000. That's where we're seeing, a significant amount of activity. It's turning into a competitive market. So to me, that tells me, you're not going to see the investors jumping back into the market like they are unless there's, a pickup in the rental market, which we're seeing. So slowly but surely, the downtown market's certainly not back to where it was. I mean, if I look at 2-bedroom condos downtown, prices are still down 6.5%, right? So still some weakness, but it's getting much, much better over the last, 6 months.
Mm-hmm. And John, are you noticing the urban exodus sort of reversing itself?
Yeah, I mean, absolutely. I mean, it's interesting, very similar trend in Toronto. The hottest market right now in the entire GTA is actually the downtown condo rental market. It's really on fire, the tightest supply. We have like half a month of inventory of condominium rentals, bidding wars on condominium rentals. So certainly a lot of people moving back to the downtown core took advantage of what were sort of softer rents. And a lot of students we're finding are coming back to the city, planning on going back to school here. And that's driving the demand for downtown condos.
Okay, I want to take a look at this chart. This is from Habistat. So what Habistat has done, you see search sales containing the word office, right? So it wasn't really a priority, let's say 2019, but then come May 2020, okay, now this is like a thing that people want. Although it's decline, you can see at the end there, it's starting to tail off. Have you noticed with your clients that people are looking for an office, maybe not necessarily a dedicated office, but just like an extra bedroom or a basement or some place that they can work? And is that maybe calming down a little bit, Steve?
I've seen, my personal clientele, I've definitely been more active this year than I normally would in the suburbs, right? Just so many young families in particular that are just looking for that extra space. Like in the city of Vancouver here, just to get a 3-bedroom is almost like this weird luxury product. Like most families are in 2 bedrooms and den. So that 3rd bedroom has always been like this sort of niche product that everybody kind of wants. And during the pandemic, obviously that became a must-have. And what we saw is, again, people just moving further and further away from the city in order to achieve that. So that's been the huge thing. It's still strong. We're still seeing a lot of demand here in the suburbs for more space, and I suspect that will probably continue, but not at the pace that we saw, obviously, at these crazy highs over the last 12 months.
Mm-hmm. I can't. The 3-bedroom thing. You've mentioned it before, but it blows my mind every time. I can't imagine having to stuff my family into 2 bedrooms. I can't. Oh my gosh, I can't imagine it. So I'm going to move on before I think about it too much. John, have you found that your clients are prioritizing office space when it comes to their search for a home?
Yeah, I mean, that was again one of the big trends from COVID. A lot of people working from home. It drove a lot of the demand. I mean, the suburban homes in the GTA are probably quite a bit bigger than they are in Vancouver, where people can get 4-bedroom homes. But especially for more urban homes, sort of the need for even a basement home office is pretty key, and it makes sense that people are adding that to their marketing material.
John, are you finding that some people are getting a bit of a rude awakening, like they moved far away? They thought, this is great. We bought this house in like Tilsonburg or something like that, and oh wait, working from home my boss wants me to come work from home. I can't work part time. I can't. Everything's changed, and now my office is 2-3 hours away. Are you hearing about that happening, or do you think that's going to be happening, John?
I mean, we're starting to hear, certainly some anecdotal accounts of that happening. People even needing to go back to work part time, 2-3 days a week if they've moved quite a ways out of the city. It's not really practical if you have a 2 to 3 hour commute to get to downtown. So And I think that's going to be one of the things that's going to be important to keep an eye on and how it impacts the housing market, because at the end of the day, those commutes aren't realistic. So either those people will have to find jobs in the local markets where they're in, or will have to kind of move back closer to cities, which could cause a bit of an impact on house prices in some of those outer suburban areas.
Right, Steve. Any anecdotal evidence of that in your part of the country?
Thankfully, I haven't had any clients yet that have regretted their decisions. But I mean, I think that, anecdotally, you hear the odd story here and there, but I think it's still a little bit early. I mean, right? Like in Vancouver here, we are reopening, but most offices haven't really got people back in. If it is, it's at a very minimal capacity. So I'm kind of curious to see again how this looks. Is it, does it start from, hey, come back to the office 2 days a week, and then it's 4 days a week, and then it's maybe it's 5 days a week, and then I start to think that these hour-long commutes to the suburbs start to become a lot less attractive. But in terms of seeing actual stories and whatnot, I mean, that one that was posted, obviously that went viral on Reddit there, but not seeing a ton of it yet.
Mm-hmm. Now that we can travel more, the U.S. is allowing vaccinated travelers in. The cottage boom, has that calmed down? I mean, it was going kind of crazy a few months ago, John, in Ontario. Has that calmed down a little bit, do you think?
I mean, I heard anecdotally that the sales cottage boom has slowed down a little bit, much like we're seeing in the core of Toronto. But I mean, the rental boom's on fire, obviously, because a lot of people, even though they can't travel, are deciding to just not travel and stick to cottage vacations. So the cottage rental boom's still quite strong.
Yeah, that makes sense. Just because you can doesn't mean necessarily want to or should. But how about in BC, Steve? In beautiful BC, is cottage country still booming?
Yeah, it's slowed down. It's still strong. I mean, don't pay too much attention to that market, but I have seen, through some of my research that it's definitely slowed down. Yeah, it's interesting though. I mean, actually, you try to go and book like an Airbnb now, for example, for any part of this summer, and there's been nothing on the market. Which for myself personally, I book Airbnbs every summer here in BC just to kind of get away, go to the Gulf Islands and that sort of thing. And there's nothing. So I just think there's so many people right now, and particularly the colleagues here in our office that are just taking an inordinate amount of time off. So again, kind of comes full circle to the whole inventory slowing down in the housing market. Just everybody seems to be on vacation mode. So.
Okay, for those buyers that are not on vacation mode, that are actively searching, they are likely going to face bidding wars still, maybe not as bad as before. But John, do you have like a system that you can use to so that clients aren't overbidding? I know that you can get a little bit overzealous and excited, and maybe think that you need to spend more than you really have to, and then regret it. Do you have a system in place, John?
Yeah, I mean, absolutely. I mean, actually, one of our agents Gus posted a great thread on this, and really, it's just driven by. I mean, the first step is just figuring out what the property's worth, which surprisingly a lot of agents don't do. I mean, from my experience, when a home's got 10 offers on it, 5 of the offers are well below what the property is even worth, maybe 2 or 3 at the low end of the value and another couple at the high end. So even a house that has 10 offers, you're really, I mean, if you've done your research or your agent's done their research, gives you a proper valuation, you're really only competing with another 1 or 2 people. So it's kind of knowing what the house is worth, and then knowing sort of how hot the market is, because you don't necessarily want to go with an overly aggressive bid if the market's cooling down. And on the flip side, if the market's super hot and you really like the home, you might need to bid a bit more aggressively. So it's a combination of knowing the heat of the market and then knowing, what the value of the house is that you're bidding on.
Okay, Steve, do you follow a similar sort of system for your clients?
Yeah, I mean, I think it's just running like an analysis, and you just here's the recent sales. The problem is like you get back to sort of March of this year, right? February, March, April, sort of the peak craziness is I can run an analysis for a client and say, hey, listen, the house is listed at 1.3. I think it's worth 1.35, but in multiple offers, you might have to pay 1.4 if you want to win it. And then what happens is you get into, 10 offers come through and it sells for 1.5. And so it's almost like you start to throw the comps out the window and it becomes just, hey, how much do you want to pay? So those are the worst kind of markets, obviously, for any buyer. And even for for someone like myself that has to represent these clients, it's like, as a buyer's agent, you always want to get your client the best price. And it certainly doesn't feel that way when you have to pay, 150K above true market value. But, we are starting to see the number of offers obviously coming off. I think, like, if I look at single family homes that have been selling above the asking price, that metric hit a record high of 58% in April, and it's down to about 30% now. So
is that still high historically?
Yeah, it's still on the high side, and again, that's just because there is no inventory. And so what we're actually seeing now is I'm not sure if John's seeing this, but because there's no listings and because you actually still have quite a few buyers out there that are still trying to buy, is we're actually seeing in the last couple of weeks a lot more buyers going back to the old inventory that maybe is not that nice or is overpriced, and buyers are actually circling back and going, okay, let's throw in a bid here. And you're seeing some of this old product that's been sitting on the market for a month or two is actually sometimes even going into multiple offers now.
Interesting. John, are you finding that homes are selling above ask at a historically high level still?
Yeah, I mean, it's still quite high. I mean, in the GTA, when we look at low-rise homes, more than 75% of homes were selling for over asking, back at the peak of the market in March and April. It's come down to, I'd say, like the low 60%, which is still quite high. And it's just, again, the summer market, things are easing up, and a lot of buyers are hitting pause or less anxious, or a little bit more anxious, and less eager to kind of pay these crazy prices. So we're definitely seeing it come down a little bit in the GTA.
And just
John, I feel like you
curious.
should. Yeah, go ahead. So I was just going to say, I feel like you should add like a little asterisk there, because I know like the common rebuttal is like, yeah, there's only X percentage of houses sell over ask because these darn realtors underprice them.
Yeah,
but the reality is like, you don't underprice these listings unless you are extremely confident that you can actually get multiple bids.
Yeah, 100%. And I think everyone thinks it's just because agents underprice homes. I mean, that doesn't, and Steve's right, just because you've underpriced a home, if the market's not super competitive, it doesn't mean you're going to sell. Like, back in 2018, 2019, maybe 20 or 25% of homes would sell for over asking, and they were the nicest homes on the market. So when you have like about 2/3 of homes still selling for over asking, it's a sign that the market's just really, really tight. It's not just the marketing strategy, because you have to have a very competitive market to get multiple offers.
Now, speaking of sign and sold over asking, I'm curious. I walk around my neighborhood and just as a casual observer, look at the homes for sale. There's not many, but when they do come up for sale, it's like you walk by one day coming to MLS, and then you walk by the next day, it says for sale, and the day 3 it says sold. So this goes to show how quick people jump on these homes. But I would say out of 10, only 1 didn't say sold over asking, and that one was actually not priced particularly high relative to the others. But if a house gets sold over asking, is it just like the gold? Like you always will put that sold over asking, and then if you don't put it, then assume that it didn't get sold over asking. Whoever wants to answer this.
Yeah, I mean, it's just, again, it's a marketing thing that agents do. I mean, a lot of times they'll do that to try to market that they're some kind of expert agent. The reality is, I mean, when 2/3 of homes statistically are selling for over asking, it's not necessarily the agent, it's obviously the market, because you can't really do that in a sluggish market. So it's a bit of a silly marketing technique.
Yeah, it's like the stock markets where index investors think they're brilliant investors, and they just buy the market and ride these huge returns, and all of a sudden they're the next Oracle of Ontario. Okay, let's move on to viewer questions. Starting with the inbox via email, we have Juan Trujillo. Juan asks, is it possible, and okay, crystal ball time, and is it possible to predict if prices will go higher or lower in the next 12 months in the GTA area for condos, semi-detached, and detached housing? Okay, so you have to get 3 for 3 here, John. Go ahead.
I forgot my crystal ball today. I wasn't prepared for this question, but I mean, the reality is, when we think about where the market's going, it's hard to think about something that's going to lead to a price decline. So, I tend to think that we're more likely to see prices on the positive side over the next 12 months, primarily because I can't see any big economic, trigger that's going to cause prices to cool down or fall anytime soon. And I think even if we did see that, there's so much stimulus that policymakers could still pump into the market to prevent that they probably would. So I suspect if we're going to see any downward pressure on prices, it's probably going to be after 12 months is my instinct.
Okay. This one we will put to Steve. This is also through the inbox. And again, thanks so much, everybody, for sending these questions in. It's great because somebody else watching might have the exact same question or be in a similar scenario. So thank you. Keep them coming. Dennis says, I'm planning to marry in just under 3 years. Congratulations, Dennis. This is when I'll be retiring and relocating to my partner's hometown. I own a house and my partner owns a house. We've discussed the tax advantages of marrying earlier while still living apart, but one question stands out with this idea. The houses. If we marry and we both keep our houses, each of us living in our own house, when I sell my house in 3 years' time, does capital gains attached as it being a second residence because I'm married? That's kind of a tough technical question, Steve, but what are your thoughts on the taxation side?
You're really throwing me under the bus here. I think from I'm not a CPA accountant here, so I can't necessarily. My understanding, John, maybe correct me if I'm wrong. My understanding is that each spouse can declare their own primary residence, so to speak. Again, could be wrong. John, do you want to chime in?
I'll pass on that one.
Okay, Dennis, get back in touch. I will put you in touch with a CPA that can answer this question for you. So please do circle back. Okay, let's move on.
CPA in Brampton.
No, I'm not going to go there. I'm not going to comment. Jack Wartsman. This is again through the inbox. Oh, did I already ask this one? Oh, this is a very similar question. Okay.
No.
I thought it was the same question. I live in Toronto. My wife and I are retired and have a paid off house. We were thinking of taking out funds from our existing house and purchasing an income condominium, enough so the condo can carry itself. With real estate going up for the last 20 years, and I hear this all the time, we would probably end up with big capital gain. What's your thought on this, John?
Oh man, this is a big question. I'm not investing in the condo market personally. I'm a little bit more reluctant. I see a ton of inventory, but at the end of the day, it's done well for the past 15, 20 years. And listen, at the end of the day, if policymakers, and this is what we're seeing, they're trying to kind of push prices up, they're trying to drive, immigration, non-permanent residents, they're trying to bring in more people than houses we can build. These are all positive signs for the condo market. Are they going to hit, go up 30, 40% in the next, 4 years? Probably not. But, I think the key is if you're holding long term, real estate generally is a decent asset class. And if you can kind of weather any short-term downturn, then I think that's a good bet if you're holding on to it for the long term.
Great. Okay, there are more questions. We'll circle back if we have time, but there's a couple of things I want to get to first. This is another chart from the Habitat. Actually, no, sorry, hold off on that chart. Pardon me, control room. Let's look at a Justin Trudeau tweet from 2015. Our plan to invest in affordable housing will help the middle class and those working to join it. This is 2015, a promise from Prime Minister Justin Trudeau. And now, let's look at that chart from the Habitat. This is what's happened since then. We couldn't include everything because it was a little hard to see. I know this is also a little hard to see, but I will tweet this out for everybody to have a better look at it. So look at that. Since 2015, Woodstock, Ingersoll is up 170-something%. Tillsonburg, Bancroft, Niagara Region, and so on and so forth. These are a lot of these are in Ontario. Brantford, Cambridge. How did this go so off the rails, John?
Well, I think there are a couple of things going on here. Certainly some of this gain is over the past 12 months due to COVID. But the reality is, house prices have definitely significantly accelerated under Trudeau's leadership. Partly because of their immigration policies. we've been letting in far more new immigrants and non-permanent residents over the past 5 years. We've had this population boom. And at the end of the day, when your population's growing at a much faster rate than your ability to build houses for people, you're going to have skyrocketing home prices. So a lot of this is certainly just a byproduct of the fact that, especially in Ontario, that population's growing at a much faster rate than our ability to build houses.
Yeah, so it's almost like the desire for affordable housing and immigration policy, they just probably aren't going to work in the current situation unless we get a huge onset of supply. Okay, I want to move on to another chart. This is from CIBC. This is showing residential investment. We've touched on this before, but here we are. Canada has become a country known for not only soaring home prices, but an extreme reliance on the real estate industry. So we have residential investment that recently overtook business investment. So that's you guys in large part, Steve and John. This isn't even dependent on high home prices. This is just purely activity. Steve, when you see this, how does this? Do you feel like targeted? Do you feel like this is not a healthy economy here?
Yeah, I mean, at this point, for me personally, all I can do is laugh and just, it is what it is. I mean, everybody knows it's crazy. Everybody knows it's not a long-term sustainable way to build, a prosperous economy. But I just feel that everybody is rationally looking around and saying, hey, it's been a 25, 30-year bull market, and I can't keep up with home prices based on my 9-to-5 income. And so what are you doing? You're seeing more and more people, especially since this pandemic, going and getting their real estate license, going and getting their mortgage broker's license, getting into pre-sale condo flipping. Like, when you get these kind of returns that we've had, particularly over the last decade, you just attract more and more capital, and it'll go on as long as, until it doesn't and something goes wrong. But I mean, obviously getting timing on that's, why we're here, right?
Something works until it doesn't. You just don't want to be on the wrong side of that. Okay, we've talked about federal measures, federal plans. Now let's look at an Ontario plan. This is from the Ontario NDP. There's more to it than, I'm just going to highlight a couple of these points real quickly, but some of this might look familiar based on the federal for first-time buyers incentive. So households with incomes under $200,000 will be able to access equity loans of up to 10% to help with their down payment. Homeowners can, basically pay it back whenever they move or sell their home. Next, we have, increasing the non-resident speculation tax from 15 to 20%. And then monitoring short-term rentals like Airbnb. I will tweet out the full link so you can have a look at the entire text of this plan. But John, what is your view of this idea?
I mean, it's terrible to even think that a household making $200,000 a year needs financial aid from the governments to buy a home. I mean, it's such a massive policy failure. And certainly throwing more money, tax money, and I mean, really, look at this: the federal government and the provincial government all now wants to share a percentage of your home. Like, is this a solution to affordability, or are they just the next real estate investors that are trying to profit off of rising asset prices? I mean, it's a silly policy. It's not a solution to affordability, and we should be coming up with better solutions than
that. Steve, what's your take, real quick? If I mean, this is in Ontario, but I mean, if you were an Ontario market watcher, what would your view be?
I'm kind of curious to know what the rate of interest is that the government would charge on those loans, but I suspect it's probably sub 2%.
I think it's
it's
shared equity.
That's fantastic. So yeah, I mean, that's going to be great for existing homeowners because I think they'll get a boost in their asset prices. Maybe it won't be so good for the people that I think will ultimately be voting for it, because I think it'll actually probably do them more harm than it will good. But that's just my opinion.
Okay, let's squeeze in one question real quick. John, all the youngish people leaving the so sorry if we can go back. Infinite Jeffs. My question is, all these youngish people leaving the GTA for big houses in small towns, do they all work from home?
Well, I mean, I think that's the plan for many of them. And then I think, as we talked about kind of earlier, I think the question's just going to be to what extent is that sustainable? I mean, people just working from home 5 days a week permanently. And I think it's, we don't know. I mean, obviously, some companies are moving towards a virtual model and it's going to be sustainable for those people. But we'll have to see over the next 12 months how many of these jobs are going to at least have some kind of hybrid model where you have to be in the office 2-3 days a week.
All right. That's all the time we have today. Thank you so much for being here, John.
Thanks for having me again.
And Steve Saretsky, thanks for being here as well.
That was a good one. Thanks for having me on.
And be sure to follow John and Steve on Twitter, where they share all kinds of market stats, insights into these markets. Give me a follow if you have any questions for these guys. Meanwhile, be sure to check out Yahoo Finance Canada for all your latest news on real estate, stock markets, the energy sector, cryptocurrencies, you name it. Thank you. See you next time.